Hi traders, and welcome to Technical Analysis Market Watch on Friday the 17th of November. So we saw some really big action this week, especially early on in the indices, and the euro certainly played the game as well. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and we can see the big move that I was talking about. This happened across all of the major indices and the currencies. Big candle right off the bat. You can see, look, we were already starting to find a little bit of support around this level here anyway, so there was no real surprise there. The indecision candle was definitely there, but really, the candle that actually really sparked it all off was this intermediate candle here. Then it just went bang. It happened very quickly, but you know, when we do get a big move like that and it hits a level of resistance, it can be very difficult for that resistance to actually break on the first bound. Like we know that that 65.50 or the 65 cent mark here is a very strong zone. Like we know that very strong support was very strong resistance right through here. And here. So it's no real surprise to see it pull back the way it has. Like it blasted through it like they often do when they go with a great deal of momentum. And then, of course, we've got that rejection. We can see that the wick is relatively substantial. Like it did reach all the way, nearly to 65.40-ish. So it's a big 40 to 45 pip rejection before it even started this next candle. And now we can see ourselves down at around that sort of 64.70 mark. So I'm not surprised that it did fail there to go further. And really what we want as technical traders is actually market to make sense, right? So what we don't want to see actually is a candle all the way up here from down here, because that makes it difficult to trade. And when it does pull back, it can pull back very aggressively. So we've got to be really careful about that. So what it's done now is reasonable in the sense that it hit the resistance and pulled back. What we want to probably do though is have it protected above that moving average. So we can see that the 20 and the 50 are about to cross, and that hasn't happened obviously since way back here at around that 67 cent mark. It's all but about to cross now in a couple of days, but by Monday it will definitely be confirmed. So what we want to see is that level hold up. So if it does continue to sell off a little bit, we want to see support at around, we'll definitely want a close above the 20 moving average. We don't want to see a close below the 20 moving average. That would not be good, and the momentum would be completely stifled at that point. So yeah, a pullback to around this level here would be about a 50% pullback of that move, which is acceptable. And then the obvious target's going to be the 65 cent mark. That's going to be the first target because that's where the resistance is. But it may well break it. That may be the time it breaks it though. So we're probably looking at it from two ways, maybe taking profit on the first one and then leaving the next one to run a little bit. But that is the trade if it does pull back. I wouldn't want it to pull back any further than the 20 moving average. And this level here around that 64 sort of 50 level is reasonable support. So anywhere in this zone for a pullback will be okay. But any further, if we get a daily close below the 20 and the 50, then I would be looking at a different scenario for this one. I wouldn't be looking for the strength to return anytime soon. So good trading though, and the way it played out was perfect, but the take profit was definitely hit. And this pullback is no surprise. It could give us a good trade if it pulls back to those moving averages. Over to the US dollar CAD, and similar in the sense of how it actually reacted, of course, in reverse. So you can see that it hit the target during the week or late last week, as you can see on the Friday, and then came back down. Hit the 50 moving average, didn't quite reach the bottom of that range, but that range is pretty big though. That's, you know, you're talking about a couple of 100 points there. So it did pull back. If you wanted to trade it, it wasn't an easy trade to get into though, because really the 50 moving average, although solid, is not the one you'd probably trade off in this scenario. There are a lot of wicks in this zone. You can see where all of the tops of these wicks are. So there is a lot of price action where it did actually hit, and that indecision candle could have given you a clue, but it wasn't the easiest one to get into, really. I mean, that's not, of all the trades that we're probably going to look at today, this would have been the most difficult to get into, I think, because that sign there wasn't really strong enough to probably take the trade. But where it is now is kind of in the middle of nowhere. It needs to, we've got to remember that we did make a lower high here. So that is important and significant in the sense of where the momentum of the overall prevailing trend is. if I was looking at it from a long perspective, I'd probably be looking up to about that 138 as the first target, which is not very far. Maybe pushing up a little bit higher if it gets up there quickly, but I would be very mindful that it could reverse there very quickly. So not the greatest of setups here, and it's kind of in the middle of nowhere, so a bit difficult to take a read on that one. US dollar yen, on the other hand, it is reacted in a reasonable manner, but what it did do is on Monday, it failed to make a higher high. As you can see, the previous high and the current high are all but exactly at the same place. Okay, and that worries me just a little bit because the momentum has been good. Now we know we got strong resistance there, so I'm not surprised that it broke it and it's testing it, but the fact that it didn't make a new high, it was entitled to at this point here. So maybe the momentum is starting to wane a little bit on this one. So maybe the long isn't looking as attractive. I don't like it when it does, when it fails to make a new high. So what it does from here is going to be extraordinarily important, because if it can continue its strength and stay above the 20 moving average and push to a new high, then we can start looking up to the 52, 50 and 53 levels, 153 that is. But it needs to effectively get above these levels. Until it does that, I wouldn't be keen on trading it from this level up to these highs here. It needs to do that by itself. I wouldn't trade that and try and preempt that move. I want to see that momentum actually kick in and make that happen itself. If we get a daily close below, I wouldn't be looking at shorting opportunities until it's underneath the 20 moving average, and more importantly underneath the 150. If we get a daily close under the 150, which is obviously going to be under the 20 moving average, then I'd be looking at the next target at around that 148.50. But yeah, it's a bit of a strange one, really. I'd be waiting for it to break lower to take the short. I'm not keen on shorting it yet, but I am starting to get a little bit nervous about the long-term opportunities on this one, because it has shown the first sign of real weakness at a level that you would probably expect it probably would anyway. So no real surprises. Dollar index. Yeah, look, it just did. It reacted like you would have expected when the big moves happened. It's in a downtrend. There's no question about that now. We've got lightning bolt on the way down. Daily showing a series of lower highs and lower lows. So we must respect that, of course. And it's found support where you would expect support to be had. You can see right through here. It had a week and a half of action, and right through here as well. It had a lot of resistance. So no real surprise that this area has pulled it up around that 104.20. It got to as low as 104 flat at its lowest. So it needs to probably bounce from here. I would expect that if it does get up to around that 105, that would be the target for a long. But of course, the euro is the one we would be looking at trading. So let's go straight to that. It did the same thing. This was the perfect setup, though, because the euro was already in an uptrend. You can see that we're in a series of higher highs and higher lows on the daily. It pulled back here. Like when we were looking at it on Monday, it was right on the 50 and the 20 at a roll reversal zone. As good as it gets from a trading standpoint. You got roll reversal. You got a series of high highs and higher lows. You're already in the prevailing trends direction. The moving averages are converging on each other, and then bang, off it went. So, and straight into the target zone too. I mean, obviously that level there was the target that we'd be aiming for. The 108.50 was the target. So hopefully you're able to get that. I know some of you did, because I saw the comments, which is great. But it was a really, really good setup, because I mean, it did pull back to the level that we wanted it to on the Monday, and then off it went. It hit the target. Now we need to see what it does from here. I mean, look, it probably will pull back a little bit, I would expect. From a technical standpoint, we almost want that and welcome that. So we'll see how that one goes, but probably just wait and see. If it pulls back a little bit and then turns around and gets a bit of momentum on a smaller time frame, say pulls back to a 20 moving average or something like that, it could give us an opportunity to get in and look for a long opportunity back to the previous high, maybe 108.80, and wait for this level to get broken before we start aiming for the next level at 109.50. If, of course, it fails, the level that we're going to be looking for is the 20 moving average and this support zone as well. That would be the target I'd be going for any shorts if we get that momentum swing in that direction. And the S&P 500, again, obviously a really, really big move. It bounced off. It did the exact same thing, came back down, tested the level we were talking about last Friday, and then off it went. Hard, a little bit difficult to catch this one, though. If you weren't already in it, it's one of those ones that made it difficult to get into because it went very, very quickly. But if you were in it and you got in it at this level here, which is definitely a support zone, so I could see why you would. That candle there would have got you in on the Friday, and the target was obviously 4,500, and it hit that. A little bit of indecision now, and no serious surprise there. Like, obviously we've got resistance there, so I would have been very surprised if it just went straight through there and broke there. Probably going to get a little bit of consolidation here, maybe even a pullback down to the 44.50 would be more than acceptable. And maybe if we see a little bit of momentum down on the smaller time frame, you see a series of lower highs and lower lows, maybe there's a trade there to get it back down to that point, pull back to 20 moving average on the way down, and then maybe look at a reload zone there. But I think if we're trading here on Monday and we see a bit of a rounding bottom, it gives us a pretty easy target to go for because it's already broken that ground up to 4,500. But of course, if it breaks the 44.50 with a daily candle and breaks this neckline of what is a very, very aggressive inverse head and shoulders, if it breaks that neckline on the way down, I'd be looking at targets down to around that 43.50 again. But that's another story. It's got a lot of work to do before it gets down to those levels. So hopefully you had a great week's trading. I think we've seen some really good action this week, and hopefully you're able to take part of it because all of our targets were hit. So that would be fantastic if you're able to get them. But yeah, the opportunities could still be there early next week if it does pull back to the levels that we talked about today. Have a fantastic weekend, everybody. I look forward to seeing you all next week.